Hello, and thanks for tuning in. You're probably watching this because you're wondering how the government's interest on interest waiver scheme is going to affect your loan or credit card dues. Well, the first thing you need to know is that the scheme is meant to give relief to all borrowers with loans of up to 2 crore rupees, irrespective of whether or not they opted for the moratorium between March and August this year. Let's get into a couple of illustrations that will help you make sense of what's being done. At this stage, though, we're going to assume that the government scheme hasn't yet been announced. So assume I've got a fixed rate home loan of 10 lakh rupees at 8%, that's repayable over 10 years. Now, to make things simple to understand, we're assuming that my first installment was due in March of 2020, and my first EMI, therefore, was 12,133, out of which the interest component was 6,667. Now, let's assume that I took the moratorium at the start of March. The bank grants me a moratorium, but two things start to happen. The bank continues to accrue interest, and what essentially happens is that over that 6 months, it also starts charging me compound interest. Now, remember, this is a moratorium and not an interest holiday or a loan waiver. So compound interest was being charged at that point of time. So let's go back to that illustration. 6,667 rupees is the interest that I owed in March. What happens because I didn't pay is that it goes and sits on top of the outstanding at the start of April. And in April, the interest that I have to pay is calculated at 8% of that higher principal divided by 12 months. And over the 6 months of the moratorium, this keeps happening till my principal at the end of August stands at 10,33,781 exactly. Now, this includes a simple interest component that is 8% on 10 lakh for 6 months, which is 40,002, and interest on interest of 671 rupees. Now, the government scheme wipes out this interest on interest charge, so I don't have to pay that additional 671 rupees. In September, instead, I can either clear the accrued interest in a lump sum along with the EMI for that month and continue with the original 10-year repayment cycle, or the tenure of the loan gets extended by 6 months. And that's in all probability what will happen with most loans. But what if I hadn't opted for the moratorium, which a lot of people have done? They continued with their payments. What essentially happens, according to the details of the scheme, is that it is assumed that I had availed of the moratorium, and that interest on interest component comes to me as a benefit, as something of a reward for having made the payments on time. In this instance, my outstanding loan is reduced by 671 rupees. Now, what if my home loan was a floating rate loan and the interest rate on it fell from 8% to 7.5% during the moratorium? And that might have happened to a lot of loans, but that would not matter because the scheme clearly states that it will not account for any changes during the course of that 6 months of the moratorium. And finally, what happens to your credit card dues? In a sense, it's similar to the earlier example, but slightly different. The government has said that credit card issuers can't charge the rolling rate, which, as you know, is very high. It's 36 to 38% per year. Now, according to a senior bank executive, the rate charged on credit card dues for this purpose will be around 18 to 20%. So let's go through another illustration here. Assume I had a credit card dues or I had credit card dues of 1 lakh rupees at the end of February, and I availed of the moratorium. Interest at 20% would then accumulate over the course of 6 months, and the interest on interest component would stand at 424 rupees, which would then be waived off because of the government scheme. So at the end of the moratorium, I would owe the credit card company just over 1,10,000 rupees. If, on the other hand, I had paid back the dues in March, I would get that benefit of 424 rupees. And according to a banker that I spoke to, this will likely get adjusted in the credit statement. Effectively, it will be set off against future dues. So the bottom line here is that you're not going to see a major difference in your loan repayment or your loan outstanding unless you have a very large loan or you're in the early part of the loan repayment cycle, because that's when the interest component in your EMI is the highest. I hope this video helped you out. If you've got more questions, you can write to us in the comment section or in fact on any one of our social media platforms. Do tune in to the website bloombergquint.com for a lot more. Thanks for watching.